And it's 1 p.m. Time to go around the world of business in 55 minutes. Welcome to Business Incorporated. Here's what's coming your way in the next 55 minutes. Just 24 hours after Nigeria's decision day for South Africa, we await the decision of the South Africa Reserve Bank. And in Egypt, the foreign reserve drops. Kenya Airways is still losing money, but at a lower rate now. Welcome to the program. I'm Ini John Mekwa. We start as usual from the global space, telling you what's going on with oil prices. It fell for a second day, dropping more than 1% on Wednesday on surging U.S. stockpiles and signs that OPEC Plus producer group is unlikely to change its output policy at the technical meeting, which is going to be held next week. Brent crude futures for May dropped 97 cents. That's about 1.12%. to $85.28 a barrel, while the more actively traded June contract fell 92 cents. That's more than 1% also to $84.71. And U.S. West Texas Intermediate crude futures for May delivery fell 93 cents. That's about 1.14% to $80.69 a barrel. The sharp rise in the U.S. crude inventories and expectations for potential inaction by OPEC Plus next week prompted further unwinding in oil prices as profit-taking accelerates after the mid-March rally. And that's still talking about global space. Now we go to the grain space and see that Chicago wheat futures fell towards 3.5-year low on Wednesday as traders dismissed concerns that exports from top supplier Russia would be disrupted and focused instead on a plentiful supply outlook. Soybean and corn futures also fell as the market looked ahead to data on U.S. planting and grain stocks due on Thursday that could move prices. The most active wheat contract on the Chicago Board of Trade was down 0.8% at $5.39 for a quarter of a bushel, while CBOT soybeans also dropped 0.6% to $11.92 a bushel. Corn slipped also. All the grains seem to be going down 0.8% to $4.29 for a bushel. All three crops are well supplied and the contracts are near their lowest levels since 2020, with speculators betting heavily on further declines. Huge amounts of cheap wheat are emerging from Russia and expect a third consecutive large harvest this year. It could set of 5 million tons this month. Ample supply is pulling prices lower, and some traders expect the U.S. Department of Agriculture to reveal a rise in inventories later this week, and that should be like Friday. Still in the grain space, cocoa prices, consumers could start to see the effect of surging cocoa prices as the world faces the worst supply deficit in decades, with farmers in West Africa struggling against bad weather, disease, and failing trees. Cocoa futures for May delivery surged to an all-time intraday high of 10,080 per metric tons. That's $1 on Tuesday before ending the day down 0.3% to settle at $9,622. Cocoa has more than tripled in cost over the past year and is up 129% this year only. Beyond fiscal supply shortages, financial market pressures intensify as traders hedge against physical holdings, grappling with margin calls on losses from derivatives. Another market now, the metals market. Gold prices edge higher on Thursday as investors await U.S. inflation data that could offer fresh clues about when the Federal Reserve will start easing its monetary policy. Spot gold was up 0.5% at $2,190.87 per ounce, while U.S. gold futures rose 0.5% at $2,189.90. Investors now look forward to that core personal consumption expenditure price index, which is expected on Friday, and the index was seen rising 0.3% last month and would keep the annual pace at 2.8%. Gold hit a record high last week after Fed policymakers indicated that they still expect to reduce interest rates by 0.75 of a percentage point by the end of this year, despite recent high inflation readings. SPDR, which is a gold trust, which is the world's largest gold-backed exchange-traded fund, said that its holding fell 0.62% to 830.15 tons on Tuesday. Well, in Nigeria, the latest access to finance report by the Enhancing Financial Innovation and Access, that's EFINA, has revealed that nearly 50% of adult Nigerians are financially excluded, and that's because of poverty. According to the report, this was despite the growth recorded in formal financial inclusion in the country in 2023. EFINA disclosed that formal financial inclusion grew from 56% in 2020 to 64% in 2023. While describing this as good progress, it notes that approximately 40 million adult Nigerians remain formally excluded. The report commends the Central Bank of Nigeria for encouraging competition in the market and enabling a non-bank-led approach, which is driving the growth in formal inclusion. It, however, notes that the formal access to 64% is only the beginning. And talking about the central bank now, authorized dealers that are unable to provide the naira to cover the FX inflows for their foreign investors to purchase money market instruments can now approach the central bank to sell the FX and receive the naira equivalent to their account. The Central Bank of Nigeria shared this information after reports that due to naira liquidity squeeze in the banking industry, authorized dealers are sometimes unable to purchase money market instruments for foreign investors. This, according to the regulator, is against the current monetary policy stance of the CBN, as a major objective is to encourage foreign inflows into the economy. Authorized dealers, therefore, can formally write the CBN using the letter heading of their bank to make requests. All right, let's take a breather right now. And of course, we cannot run away from the decision yesterday where interest rate in Nigeria was hiked by 200 basis points. We'll have that conversation after the break right here on Business Incorporated. Do stay with us. Welcome back. Still watching Business Incorporated right here on Channels Television. And yes, we delve into that decision that was made yesterday, 200 basis point increase on the MPR for March until we meet again in May, according to the announcement of the Central Bank Governor. But let's look at those details, scrutinize the factors and what to expect between now and March. And we're doing that with the Chief Executive Officer of the Center for Promotion of Private Enterprises, Dr. Muda Yusuf. Dr. Yusuf, good afternoon. Thank you so much for joining us in the studio. So was it within your expectation, the 200 basis points increase?
Actually, I was expecting a hold because, you know, when there is too much of tightening, it can result in suffocation. The tightening that we had in February was really quite significant, both from the perspective of the interest rate, I'm talking of the policy rate, and the perspective of the CRR.
I know you're very passionate about the CRR.
Yes, because increasingly we seem to be disconnecting the banking system from the real economy. That is the major worry now. Because the whole essence of banking is to support investment. And I'm talking about real investment. I'm not talking about investment in treasury bills and all these other financial instruments, because those things don't create jobs. Those things that create jobs increasingly are finding it extremely difficult, to cope with the credit condition as a result of this tightening. Admittedly, there are some positives because typically economic policies have pros and cons. They have merits.
They have downsides too.
Yes, of course.
Which is why the CBN governor keeps saying that, they are aware that the price to tame inflation is growth. And they are ready to give that up at least until we see that inflation starts, decreasing.
But the point to make is that we need to define the limits of how far the tightening should go. And we need to also reckon with the reality of the limitations of monetary policy in this environment as far as, taming inflation is concerned. The reality is that there is a major component of supply-side issues in all these equation dynamics. And if you are coming from the mindset as if the monetary policy instruments will exclusively deal with this situation, then a lot of damage will be done.
Yeah, I think the CBN governor also said that yesterday. Yes, he talked about the agriculture, the security, and all of that.
Yes, he said it, but the rate at which the tightening has been going, look at, for instance, the implications for financial intermediation. The whole essence of a bank in a normal economy, I'm not saying this economy is abnormal, is financial intermediation. That means you channel resources from the surplus end of the economy to the deficit end of the economy. And we know that in this economy, there's a very huge financing gap. A lot of sectors are yearning for financing, affordable financing. Now, you already have CRR at 45%. That means from the deposits you have, 45% of it is out. You have liquidity ratio at 30%. That means from your deposits, 30% should be kept in liquid assets. If you add the two together, you are talking about 75% already. So the banks have just about 25% to do business. So already, that's a major risk to financial intermediation. And it's even a risk even to financial inclusion. And such trends has a way of decoupling the banking system from the real economy.
But how do you see this being handled? Because, even if there's a lot of economic activity and people are making money, the inflation keeps eroding the value of that money. So how do you think there can be a balance?
You see, there are arguments on both sides. If there's a lot of economic activities that increases output, an increase in output can moderate inflation. That's a reality. Now, look at the scenario now. Prime lending rate, that's the rate for the premium customers, as at February, was about 26.6%. Prime lending rate. As at February.
Okay, that was before the hike.
Before this hike.
Before the first hike.
No, before
this second one.
Yes, before the second hike. 26.6%. That means that for SMEs, you'll be talking about 30% in terms of lending rate. That is before this hike. Now, tell me what business you will do in this economy as an investor, either as a manufacturer, as somebody is in the agri sector, as somebody is in real estate or construction, even in trading. What business will you do to give you a return of 30%? What business?
So what can we do?
So when you have that scenario,
yes,
you already have a major issue on your hand. That means these sectors have no business approaching the banks.
So I'm wondering, Dr. Yusuf, I'm wondering what Ghana did when they went from more than 50% inflation to now to their 20s. Perhaps we could learn from that.
We could learn from that. But I don't think what Ghana did was exclusively dependent on monetary policy issues. You know, they had all sorts of programs with the IMF and all these international organizations. Because one of the major considerations for all this tightening is about exchange rates. And we must commend the progress that has been made around the exchange rate. I mean, we have seen some improvement over the last 2 weeks. But whether we can ascribe these improvements exclusively to this tightening is a different thing.
Yeah, somebody said we should be careful because we see the CBN intervening, and that might be why we see this. And it is costing us when we look at our foreign reserve.
Well, the whole essence of a reserve is also to support your currency. So we should not be counting it so much as a cost. What is important is to be able to manage the situation sustainably. And I'm sure the CBN is on top of that. And in addition to that, over the last 2 weeks, we have seen a whole lot of intervention by way of these several circulars from CBN, trying to curb all manner of malpractices within the system. Because there are also people issues. Apart from these issues about supply and demand, there are also people issues, people who are manipulating the system, people who are speculators. So unless we also deal with them, they may continue to create distortions in the system. So that also has helped the situation. So there's a whole lot of factors. But my concern is that we should not tighten to the point of suffocation. You know, to the extent that, I mean, imagine people who are already indebted to the banks, who have ongoing projects. That means those projects are already dead on arrival. If you have taken money from a commercial bank to set up either a farm or a manufacturing industry or whatever business, and you have this kind of interest rate, sometimes the business has not even taken off. You're already paying back. I've heard stories of people whose projects have gone under because of all these macroeconomic headwinds. But they borrowed money to fund the projects. Now, on top of the fact that the projects have gone under because they are stalled, because of all these macroeconomic issues, the money they owed, the cost is being revised. And you know how this system is. When you are dealing with the banks, there is no human feeling or human consideration.
You have to stay formal.
Yes. But it's a very mechanistic relationship.
So, I mean, everybody now agrees, because even when we listened to the CBN governor yesterday, of course, he did talk about the fiscal side, the need to deal with issues around agriculture supply, insecurity, which might explain why the former CBN governor did a lot of intervention. So it becomes kind of frustrating for a CBN governor when you know your limit is just within the monetary policy, but major contributors to the inflation that you're trying to deal with is on the other side, on the fiscal side. So I wonder how, for instance, the CBN hopes to hit its 21.7% inflation target that it set for itself.
Well, that is why I feel that the CBN should also be more measured in its application of some of these tools, monetary policy tools. Because there's only so much you can achieve with monetary policy. So the point he made in the communique about the fiscal side is valid. So we should be seeing more action in terms of that coordination and complementary fiscal policy measures. So that the monetary policy instruments or the monetary policy institution is not running faster than the fiscal policy angle. Because you'll be hurting those for whom the financial system is also supposed to support. Now, you talk of liquidity. what are the sources of this liquidity? Have we done any empirical study to establish that this liquidity is coming from credit creation? Because there's how much people have access to bank credit anyway. You know? And we know that over the last few months, we have seen a lot of improvement with respect to government revenue at all levels of government. That's a major source of liquidity. How do we manage that?
So you think that's also feeding into
this inflation? It's feeding into it. Because all this monetary policy tightening, they are not borrowing money. It is their own money, so they can spend it. It has nothing to do with whether you are hiking MPR or not. It is their money. It's not borrowed funds. They can spend. You know? Then when you look at the data, surprisingly, even credit to government seems to be increasing. It came down drastically in October to less than 10 trillion. But if you look at the data for February, it's over 30 trillion.
Why that? So
it seems that we also need to interrogate what is feeding into that. Because I know that one of the major points that the CBN had made is to, keep this ways and means financing extremely low. And the CBN governor has been doing that. Unless it's a mistake. But the data is showing over 30 trillion in terms of credit to government in February.
So
it looks like January. So we also need to look at that side to be able to determine where this liquidity is coming from.
That's feeding into this inflation.
Yes.
Because even the CBN's outlook says that we're going to have inflation numbers by middle of next month, and it's going to surpass 32 trillion. So, 32%. Yeah. So, it doesn't look like we're coming down anytime soon, it seems.
No, that is why we need to worry about other drivers. For instance, we should be looking at things like the exchange rate for the payment of import duty.
That's constantly changing.
Yes, it's something the business community have been complaining about. And I'm appealing to the CBN in conjunction with its fiscal authorities. They should have a second look at it. Because that is also feeding into this inflation problem. Because if you struggle to get your forex at such a very high rate,
then of course
then
you have to add that.
Pay duty at also a very high rate.
Then the consumer will pay for it eventually.
The consumer will pay for.
All right, Dr. Yusuf, we have already gone more than we should. Dr. Muda Yusuf, Chief Executive Officer, Center for Promotion of Private Enterprises. Thank you so much for always making time for us. We really do appreciate that.
Thank you, Ine. Thank you.
All right, so now we head to the market with Anita Edet to see if the market or investors have started reacting to those numbers yesterday. But let's take a breather. We'll be back with the markets. Welcome back. Let's head to the markets now and see how investors have been reacting to that interest rate hike by the CBN yesterday. Anita is here with the numbers.
Yes, good afternoon, Nini.
Good afternoon.
Yes, as usual, I talk about the markets. And of course, first we start with a review. Tuesday, it was a red for the red close. I think you took the market yesterday.
Yes, it's been red for this week.
So far, and that's before the MPC meeting. But then, guess what? After that 0.18% decline, which is about 103 billion naira decline, we see, first of all, you can see on your board here that the Nigerian stock market is in the green. And then, of course, tomorrow will be the last trading day. So far, month to date, we're 39% positive. So now let's give you that details. Look at your board here. We're back at the 104,000 level. Briefly, the market had dropped to below this level. It went to about 103,900 points. But very well, at intraday, the market is up, and then it's still climbing. And for the other side, we still see South Africa is also up, as well as the Kenya Stock Exchange, which closed Tuesday in the green. What a massive 5.0% increase. But the lone loser there was the Egyptian Stock Exchange, the EGX 30, which was down by 1.42%. So now, Nigeria's Monetary Policy Committee had held their meeting, the second one, in just about a month from February 27th, which was just last month, and then March 26th, well, we saw another, but not too hawkish compared to the previous one, but so far 600 basis points increase. Now, let's talk to Peter Abe, equity trader at IBTC Stockbrokers, to tell us how this impacted investor sentiment, particularly at intraday. So now, Peter, thank you for joining us.
Thank you for having me.
Okay, so now let's get straight to the market. We saw that the impact of this MPC's rate hike, the second one so far, and the 11th one since it began, since 2022, the Naira had appreciated by 1.8% to about 1,382 Naira against the dollar. Now, that's at the Nigeria Autonomous Foreign Exchange Market. Now, that's a plus for the Naira. And then the Eubank is also making some gains. But how is this impacting investor sentiment as well, the overall economy?
If we look at it from many sides, I think the banks will have it good. They will make more money on the back of the increased MPC rates. But on the other sectors like consumer, industrial, I think that may not be totally good. If I look at what's the stocks trading on the NGX at the moment, banks have gained 1.89%, and consumer index has lost. So that shows that it will be a mixed sentiment for different sectors. Banks will be good and consumers will not be good based on the sentiment and also high interest for them.
Okay, so Dr. Peter, another question I would like to ask you. Now, this is the second Monetary Policy Committee meeting for the Nigeria's MPC. Now, they will be meeting in May. So now, if the Nigeria's inflation comes in higher at maybe above 32%, what do you think the MPC would do? What are you anticipating at the upcoming meeting sometime in May?
Well, the CBN has signaled that they want the difference, for layman language, difference between the inflation rates and MPC to be minimal. I mean, as much as possible. So the possibility of another hike is there, just to ensure that it's attractive to foreign investors. But like I said, on the other side, for other sectors, especially the real sector, it may not look so good.
Okay, Dr. Peter, so let's leave it there and then focus on other markets. And of course, we hope that Nigeria's stock market will close in the green for middle trading session. So,
thank you.
That was Dr. Peter Abe, equity trader at IBTC Stockbrokers, with the intraday market analysis. Now let's move over to the world's biggest economy, US stock market. At intraday, for the stock futures, all in the green, and that's coming out from the previous losses that it had in Tuesday's trading session. That's because there was some pullback on major AI stocks, as well as some other stocks across the three averages. So now, all the averages, the Dow Jones Industrial average 0.31%, S&P 500 0.28%, as you can see on your board, and then almost the same margin for the NASDAQ futures. Now for Wednesday, because Thursday will be the last trading day for the US financial market, as well as other major financial markets across the world, except for some Arabian and GCC countries. So, but traders will be monitoring commentary from the Federal Reserve Governor Christopher Waller, where Wednesday evening, which is today, although there's no closely followed economic data for today. Later in the week, investors will also watch out for the data on the US jobless claims, the gross domestic product, as well as consumer sentiment. So now that's it for that market. Now, for the close of Tuesday's trading session, we have our Washington correspondent, Mario Bird, with the details.
The U.S. stock market took a dip on Tuesday as the Dow Jones was down at 0.1%, the S&P 500 down at 0.3%, and the heavy tech Nasdaq down at 0.4%. Many investors are a bit concerned as to what will happen over the next days and weeks ahead, as 2024 started off very strong for the U.S. stock market. We have seen a flattening and even a decrease in some areas. It is clear that investors are also watching to see the U.S. economy and the confidence that consumers have in the market. Consumers are showing a bit of a concern of the U.S. economy as inflation continues to rise and as Americans continue to still fall short in their pockets. It is clear investors are going to see how things are going to end up and hopeful that the second quarter will be much better than what they've seen over the last few days.
With details of Tuesday's trading session for U.S. stock markets on Wall Street. Now, let's look at the other side of the market. We're talking about the Middle East, where we see the GCC stocks mostly in the red, led by, actually was led by the Qatari Stock Exchange. But take a look at the United Arab Emirates stock exchanges. The Abu Dhabi down in the red, 0.47%, almost 0.5% decline at intraday, while the Dubai FM, 0.38%, also in the red. Now, the other side of the GCC stocks, we see Saudi Arabia being the lone gainer there, just a tad, 0.04%, while the Qatari Stock Exchange, like I mentioned, was in the red, 0.5% on the decline. Now, for the last market that we're on our radar, we see the Asian markets mostly mixed. This is because investors were assessing economic data out of China as well as Australia, and for the regions, one of the region's biggest markets, stock markets, that's the Japanese stock market. But the Japanese stock market was one of the gainers there, 0.9, almost 1%, and then back at the 40,000 level, which is a drop before. Now, for the yen had dropped against the dollar. It dropped to about 151.97 against the dollar. That's its weakest level in 34 years, and that's against the greenback. It appeared the losses after initially sliding to its lowest level versus the dollar. And then, of course, this is because the finance minister had given a stern warning that, about intervention, and saying that they won't rule out any step to respond further to disorderly FX move. Now, FX is having an issue, having its own impact on the Japanese market. So that's also riveting that market. So that's it for that market. Now, the Shanghai, which we see 1.2%, this is coming as China's combined industrial profit for January and February climbed 10.2% year on year, and that's according to data which also show that industrial profits fell by 2.3% for the whole of 2023. So, and for the Australian Stock Exchange, the ASX 200, we see it up in the green, and that's because we see that it extended the gains as the data coming from Australia shows that the consumer price inflation in February rose by 3.4% year over year. And this is the first inflation reading after the country's central bank said it was too early to rule out a further increased interest rates. So that's it in a nutshell for the markets that we monitor at intraday.
All right, thank you so much, Aniche.
Pleasure.
Now let's, talking about the markets, we head to London Exchange, and we hear that Bitcoin and Ethereum will be debuted there by May. Well, let's find out more with Juliana. Hi, Juliana. Good afternoon. Can you tell us more about this?
Yeah, absolutely. Good afternoon, Innie. This announcement was actually made on Monday, as you said, by the London Stock Exchange Group. It follows kind of weeks of speculation as to whether the city watchdog, the Financial Conduct Authority, would follow in the footsteps of the US Securities and Exchange Commission in laxing the rules around trading of Bitcoin and Ether, just because there have been so many issues in this country, particularly about anti-money laundering rules. So it is quite complex, and this isn't for ordinary investors. But according to the press statement, basically from the 8th of April, seasoned investors backed by financial institutions will be able to apply for exchange-traded notes. And it's worth mentioning that exchange-traded notes are mechanisms of debt. So it's not funds, it's debt that you would be able to purchase, but it would give you access to the market of Bitcoin and Ethereum. And we know that recently there's been a huge interest in investing in crypto again. I think it was just a couple of days ago, Bitcoin managed to hit a record of $71,500 US. I know they've got their halving season coming in a couple of weeks. So, of course, before then, there is always so much interest in trying to get your hands on one of these digital coins. But it does go to show that perhaps, UK regulators are starting to see that perhaps, there is interest there, although it's regulation that is the main concern for British institutions, particularly, as I say, anti-money laundering. So this still does need approval. We are still very much in the early stages. So from April the 8th, you would be able to apply for this. But then again, even the application process is going to be incredibly stringent because they want to make sure that all the money that is being exchanged isn't just speculative and that it can actually be backed by real funds. So, yeah, quite complex and complicated. And this is debt. It isn't funds. But again, it just goes to show that Bitcoin and Ethereum are really taking financial institutions by storm.
Yeah, well, I guess the name of the game is regulation. In the US, it's the same. Even here in Nigeria, we know crypto is facing, or Binance in this case, but I mean, it's all about crypto and that issue of anti-laundering right there. But let's head to markets. What are the other things happening in the markets?
Yeah, well, red is the colour of the FTSE. We've had 2 days of falling oil prices. The barrel of Brent crude is down, which is why BP and Shell are the biggest fallers on the UK blue chip index. There's also been lots of criticism, shall we say, of Chris O'Shea. Now, Chris O'Shea is quite a popular CEO of Centrica, which is the parent firm of British Gas. And it's just been revealed that last year, he managed to take home £8.3 million as part of his pay packet. Now, he's actually paid £4.5 million. I can't do that conversion in Naira, but it's a lot of money. And the fact that he managed to double his pay, because, of course, they've had an amazing year. Energy prices are 25% higher than they were 2 years ago before Russia invaded Ukraine. And we still got millions of people in this country struggling to pay their bills. So not great news for him, showing that he took home nearly £9 million last year, where people are, deciding whether to heat or eat. So that has kind of been reflected. It's a big city story. But the all share at intraday, it's down in it. It's down by 0.29%. The FTSE 100, the UK blue chip, that's down by 0.35%. And the FTSE 250, the domestic market, it's down by 0.28%. In the currencies market, the British pound is trading up against the US dollar. That rally continues. It's up by 0.04%. The pound is up too against the euro by 0.05%, but down today, at intraday, against the Japanese yen by 0.24% today.
Yeah, thank you so much, Juliana, for those numbers. Let's head to Berlin now, and renewable energy is the theme right there. We see that the government of Germany has made a huge investment in wind energy. Well, let's get the details now with as joining us for this is Lars Holter joins us for that. Hi, Lars, good afternoon. So what's new about this investment?
Thanks for having me, Ini. So to better understand what's going on, you have to follow me to Germany's northern coast, to the town of Cuxhaven at the North Sea. That is the German part of the Atlantic. The North Sea, together with the Baltic Sea, is the center of Germany's offshore wind energy. Offshore wind parks there have been built for years, but there's been problems regarding construction since the ports were never really built to handle the extremely heavy freight needed. So now the German government is investing 100 million euros in Cuxhaven. It is a third of the cost needed there to improve the port infrastructure, including the shipping docks. Some of them will be fixed and 3 new ones will be built, and they will be built specifically to handle wind park equipment. They're seen as a key element of Germany's energy transition, and that is, of course, the German government's strategy to move away from fossil fuels entirely into renewable energies over the next couple of years.
I wonder why wind, actually.
It's extremely important. As a matter of fact, wind currently makes up almost half of Germany's energy use. Looking at data from this past weekend, it was 49.8% of all the energy used. Another 12% came from solar, 11% from biomass, and another 5.5% from water. Only 18% came from coal and natural gas. Now, these numbers are constantly changing depending on the weather. In summer, for example, solar energy contributes a lot more than it does right now. But generally, wind is the main source, and that's why the government keeps investing heavily in that sector. It is also where Berlin sees the largest potential for further growth, especially offshore, and that is for two reasons. Not only does the wind blow a lot stronger out at sea, so the largest turbines can be used to generate very high amounts of energy, but also there's never any protests filed against new turbines, as opposed to every time any town wants to build new turbines on land, and people are quick to take to the streets to protect their landscape. In what is usually a prime example of NIMBY politics, everyone of course knows that we need more wind energy, but not in my backyard.
Yeah, I guess. What's the market looking at this time?
Two words, interest rates. But this time, we're not looking at the US, we're looking to Japan. The Bank of Japan has recently raised its key rate for the first time since the financial crisis. Yes, you heard that right. For years, while other countries have moved their rates aggressively to support their economies or to tame inflation, always trying to react to most recent data and stay on a certain course, the Japanese central bank has sat it out. Anyway, they recently raised rates, and it has led to some speculation that more monetary tightening might be coming. That's not so, says a Bank of Japan board member Naoki Tamura, and he's insisting there will not be a speedy program of monetary tightening. It is putting some pressure on the yen this morning, and it's definitely a situation to keep an eye on.
Yeah, interest rates everywhere. Lars, thank you so much for that. All right, now let's go to South Africa. Talking about interest rates, we're expecting that big announcement, and it was supposed to start about 45 minutes ago, I guess. And we have our correspondent, Innocent Semosa, to give us update on what's going on. Hi, Innocent, good afternoon. So yesterday was Nigeria. I think the day before was Ghana, then yesterday Nigeria, today South Africa. Has the announcement been made yet on the rate?
Well, not yet, Ini. A very good afternoon to you and our viewers around the world. It's always good to be with you. Well, not yet, but the Joburg Stock Exchange All-Share Index is firm ahead of this MPC announcement. The rand is trading 19 rands against the dollar. I think it's safe to say it's quite firm against major currencies. South Africa's economic landscape, Ini, you and I have been talking about this for quite some time, has been marred by various challenges, including sluggish growth, high unemployment rate, and persistent fiscal deficit, and also not forgetting that COVID-19 really exacerbated all of these issues, straining South Africa's economy. But of course, as you rightly indicated, Ini, the South African Reserve Bank is set to announce its decision on the country's interest rates. And of course, economists, many of them, they've been saying that they don't expect the Reserve Bank to hike interest rates because the inflation rate, it is within the target range of the Reserve Bank. So they feel that there's no need for them for the Reserve Bank to essentially hike the rates there. But the decision, of course, comes against the backdrop of efforts in it to balance the economic recovery with inflation pressures, of course. The decision, of course, to leave interest rates unchanged reflects a cautious approach aimed at supporting economic stability and, of course, facilitating recovery efforts. Of course, as you rightly indicated yesterday, it was Nigeria. I think also, allow me to say, Nigeria is also grappling with a whole host of economic challenges, including dwindling oil revenues, foreign exchange constraints, and heightened inflationary pressures. Yesterday, Nigeria's central bank raises the benchmark to 24.75%. Well, we do know also that the decision by the Monetary Policy Committee was the second since Cardoso took office last September. But I guess they're doing that perhaps because they want to attract more investors into the country. But at the same time, it's not popular for microeconomy if you have to hike rates, because hiking rates in many respects, it does slow down economic activity and spending, also consumer spending. So it does pinch the microeconomy. Entrepreneurs feel the pinch alike. But there are low-hanging fruits. For example, issues around it attracting more foreign investment because the rates are up, and also the demand on the currency. So I guess that's what they're trying to do. In fact, I was talking to Ladi the other day saying that we've got a lot of rice in South Africa and we can perhaps export it to Nigeria because food prices are expensive in Nigeria. So I was telling him that maybe we can look at the challenges that Nigeria is facing with food and and make it up to benefit our economy, and then in return, you guys can help us to operate, not relying on government utilities like water and electricity.
All right, Innocent. Yeah, I remember that conversation with you a couple of days ago. But trust me, Nigeria can produce for itself if only they will deal with issues of infrastructure for logistics and security. But I mean, I know you're on that case. That's the announcement by the Reserve Bank. And by tomorrow, we would get at least a report from you on that. I mean, the hold seems possible because when you look at South Africa, your inflation rate is single digits. It's not like Nigeria. We're dealing with double digits, more than 31%. But Innocent, thank you so much. You'll be expecting that announcement by tomorrow.
Thank you so much, colleague.
All right, from South Africa, we move to Egypt, where the foreign exchange has dropped to $121.9 billion. Egypt's foreign exchange revenues, that's what we're talking about, and that's about 24% drop for 2021-2022. It's according to data published by the Central Agency for Public Mobilization and Statistics. The decline was mainly due to lower government revenues of $2.4 billion. Then foreign exchange payments amounted to $135 billion in 2022-2023, a 27.1% decrease from $185.3 billion. This decline was driven by reduced financial accounts payment, which fell 7.6 million. Transactions with Arab countries contributed significantly to Egypt's revenues with a total of 45.6 billion, led by Saudi Arabia at 18.3 billion, and then the UAE, that's the United Arab Emirates, at 12.8 billion. And in Kenya, right there, still not a good one, as the Airways, Kenya Airways, has announced a drop in its losses, with the loss after tax reduced by 41% to 23 billion Kenyan shilling. It used to be 38 billion in the full year of 2023. The reports, this shows a decrease is attributed to various strategic initiatives implemented by Kenya Airways in recent times. And these include cost optimization strategies, route restructuring, fleet management, and enhanced operational efficiency. They have adopted these new strategies, and even though they're still losing, but is at a reduced rate at this time. And from there, well, I guess that Ladi will have to go back to London and maybe talk to Juliana about that Bitcoin and Ethereum going back. But you have a very red board,
yes,
Ladi. Even though you're heading to the London Exchange, it's so red. I don't know if it's a good time for you guys to go there.
Well, red. You know, most traders actually love the red color because that
it gives you an opportunity to...
Right, but even though it's red, this is still a big number for Bitcoin. You know, from looking at where Bitcoin has come from, it's come a long way. Remember, we're talking about $17,000.
Yes.
You know, at some point. And look at it. 70K, and we're getting crazy predictions.
And this is before the halving.
And this is before the halving. So who knows, you know, what's going to happen next. Maybe they're going to sell the news, or maybe it's going to keep rallying. Who knows? But let's look at the top stories in the market now. So Ini did mention the UK, that's the London Stock Exchange. I'm looking at listing some of the an exchange-traded note that's coming in May at some point. So we're seeing that big news. And we see the UK also regulating. They're looking at regulating memes at this point. Talking about meme coins, those are some of those dog-inspired cryptocurrencies that rally a lot, you know, in most of these markets. Some are frogs, picture of frogs and all of that. And a lot of people like some of these memes. Even Shiba Inu is a meme too. So the UK is looking at regulating that so that investors don't lose too much money on that. Then we see crypto AI tokens, they're set to merge. We're seeing top AI protocols like we've seen the likes of Singular Network, Fetch AI, and Ocean Protocol. They are looking to merge at this point and have just one major token to represent all of their companies at this time. Then we also see Standard Chartered, they're predicting Bitcoin will surge to about $150,000 per coin. So that's their predictions. The top bank, and they're saying this is going to happen because we're seeing the halving and major tailwinds for Bitcoin at this time. So that's the prediction from Standard Chartered at this time. Let's talk to Jay Hamid now. She's a crypto journalist, join us via Zoom. Great to have you on the show.
Hi, thank you. Thanks for having me.
Right, so I'm talking about London Stock Exchange looking to list ETNs of Bitcoin and Ethereum in May. How bullish is this for crypto?
I'd say pretty bullish because if we're going by the institutional capital that we've seen being poured into the market due to the recently approved ETF by the United States, then this is also going to give professional investors, people that have big money and are willing to kind of get into the market, but without having to worry about these risks associated with directly purchasing Bitcoin or getting into it through ETFs. Then I think we're looking at probably billions of dollars in capital inflow, maybe probably in the first few weeks, because this is a big deal.
Right, and definitely we've seen the US approve some of the ETFs. They're about 10 or more, but now UK is getting involved. And I'm wondering who's going to be the first African country to actually, or African exchange to actually launch the ETF. We'll be watching out for that. But Solana-based meme coins are still rallying at this time. Why is Solana getting so much attention? We're seeing the UK looking at regulating meme coins at this time. How are you seeing it?
I don't know. I think that the meme coin market is probably one of the riskiest markets probably the riskiest market in crypto, actually, because it's something that can be up by 1,000% today and be down by 500% the next day. So this regulation is kind of going to give people more confidence to jump into the market without having to worry about people kind of controlling the volatility of the market. I don't know if that makes sense.
Right, and definitely we know meme coins, some just like the picture of some of these dogs and cats and frogs, and they throw their money in there, and the next thing you hear of rug pulls in the market. That means the whoever created that coin just runs away with all the money. But we've seen the first quarter. It's technically over at this point. What are you expecting for Bitcoin price action, say in the second quarter of 2024? Any tailwinds or headwinds?
Well, experts are projecting about $150,000 to $200,000. And, we're looking at more institutional investment from ETFs and the new ETNs and also the Bitcoin halving. So I'd say I expect Bitcoin to at least be over 100,000. At least.
Yeah, we've seen a lot of wild predictions for Bitcoin at this time. Well, when it comes, we'll see. Definitely. Thank you so much, Jay Hamid. Thank you.
Thank you.
All right, so let's look at the top cryptocurrencies we track now. We see it's extreme greed in the market, 83 points over 100. So we're seeing most of investors getting really bullish at this time. See Bitcoin, 70,000, down 1.57%. But the big down is this afternoon. We see Cardano, 64 cents, down 4.05%. XRP at 62 cents. That's down 4.41%. We see the top gainers, MNT is topping that counter, 38.86%, double-digit gain. Fetch AI and AGIX. I did talk about some of these AI protocols looking at merging their tokens. So we're seeing that actually impact the price. And KuCoin shares topping the losers chart there, 15.04% down. So, as we're saying, it's all about ETFs, ETNs at this point. I'm wondering who will be the first African country or African exchange to launch a Bitcoin spot ETF, because Nigeria did lead when it comes to central bank digital currency.
I don't know why.
We launched the e-Naira first. So
I don't know why you're looking for Africa. Let's set it up. Set it up.
Okay.
If a country like the UK is still struggling with regulation, then, I mean, let's look that way first. When they've got laws set,
before
then we can
look
come
at
to
Africa.
Yeah.
Right. Fantastic.
All right, Laddie, thank you. So that's it on the program. Thank you so much for being a part of this. The day after the MPC, we saw the NGX recovered. We hope it recovers to the close of trade, because I'll be telling you about that during the news at 10. But I'll see you tomorrow. Laddie will see you at 10 a.m. I'll see you at 1 p.m. Enjoy the rest of your day.